Finally here. Today's January 5th. It's a Tuesday. Today's actually, believe it or not, but today's actually 27 years that I've been at this game, that I've been trading, exposed to the markets, involved with the market, testing, trading, running funds, scheming new trades for you guys. 27 years. Time sure as heck flies. I remember exactly what I was doing 27 years ago today. My, oh my, times have changed. I was actually in Big Bear Lake, California. It's about 2 hours east of Los Angeles, about 7,000 feet up elevation. But anyhow, let's talk about how to take advantage of the market this year. Now, 2021 is going to offer a lot of opportunities for us, but I believe there's going to be some peaks and valleys. One of the strongest sectors, in my opinion, is going to continue to be the semiconductor sector. And I'll tell you why. I have several opinions. First of all, software as a service industry is just blowing up. Cloud computing is going crazy. Everything is done in the cloud right now. And all of these services in the cloud are done on a subscription basis. So they are increasing, they're calculatable. Everything is moving to the cloud. You have e-docs. You have artificial intelligence, you have self-driving cars, all of these things, entertainment, new gadgets in the entertainment world, all of these things require chips. Matter of fact, a lot of the carriers, the network carriers like AT&T, Verizon, T-Mobile, they're moving into 5G. And I was just reading an update how Apple has to change all of their iPads to be 5G compatible. So all those, just imagine all those iPads that people have been buying and keeping, the ones you give to your kids, they all have to be completely upgraded for 5G. And there's a company called Cuervo. It's a semiconductor company that does that. But the bottom line is, the point I'm making is, semiconductors are not going anywhere. And this pandemic that has infiltrated the world, it's only adding to the speed and the need for faster processors. So, because think about this, Peloton, Zoom, all of these stay-at-home gadgets that are making it easier for us to communicate together, they are powered by processors. And what COVID has done is it created an environment where everything tech needed to speed up even faster in order to accommodate the type of world, this new world environment that we're living in. And I'm gonna tell you something else, folks. If you think after this COVID, after everybody gets a vaccine, we're just gonna go back and offices are just gonna all open up again and people are gonna be working no, things have changed permanently. Not 100%, some offices will reopen, but I'm gonna tell you, a lot of people like the stay-at-home, work-at-home business. And it's working for a lot of industries. So I'm seeing commercial real estate, and maybe even airlines suffer for a lot longer than people believe. But again, semiconductors, whether we reopen the world or not, they are going to continue growing. So I believe it's going to be one of the few recession-proof industries where we can put our money in 2021 and feel relatively safe. Now, there's no guarantees. My last name is Scott. It's not Nostradamus. I cannot predict the future, but what I can tell you is that there is a huge, huge appreciation for everything semiconductor. Just think about it. Every disruptive technology, self-driving cars, evergreen energy that Biden's about to put $2 trillion into, all of this involves semiconductors. Everything involves chips. So I think chips will be a great place to invest in 2021. So first of all, this is the PHLX Semiconductor Index. This is the SOX. This is the main index that everybody who wants to gauge semiconductors begins with. You can't trade the SOX because it's an index, but you could look at it and you could see how it's performing comparison to all other assets, NASDAQ, FANG stocks, and so forth. Now, the FANG stocks have been struggling, interestingly enough. Usually semiconductors and other chip stocks or tech stocks move hand in hand. But there's been a big diversion between the majority of tech, like Facebook, Apple, NVIDIA, Amazon, and semiconductors. Semiconductors continued going higher, but for the most part, the large FANG stocks seem to have topped out around September. So the semiconductors are outperforming. Now, you're probably thinking to yourself, Roger, why are you talking about semiconductors and showing me this beautiful index that's making new highs? Let's see if it's new highs. Oh yeah, new highs. Look at this thing go. I mean, look at this thing go. And I can't trade it. What good does it do? Well, there's another index, and it's not the SOX, it's the SMH, and it's completely tradable. It's an ETF, and look at the correlation between the two. It's like we're looking at the exact same thing, right? Look at that. That's one, and that's the other. That's the tradable one. That's the non-tradable one. Notice they're all making multi-year highs. Look at that. That's the tradable one, and that's the non-tradable one. Tell me there's even a difference between them. There isn't. Now, but the good thing is you can trade this VanEck ETF, SMH. And if you look at the constituents, you will see what it has in it. So to give you an example, Taiwan Semiconductor, NVIDIA, ASML, AVGO, AMD, Texas Instrument, Intel, Qualcomm, Micron, Analog Device, all the usual suspects are here. So if you don't feel comfortable, or if you want further diversification and you don't want because remember, with individual stocks, you can get bigger gains, but you're also prone to bigger downside. So it works one way and the other way. So again, you can invest in the SMH, leave it alone, or use it as a trading vehicle. And it's looking really good right now. It's been kind of moving sideways. It topped for a little bit, and now it's moving sideways. Let's go back to the daily chart. And you can see here it's making highs, but the volatility is not increasing. And one of the things I look for is constant volatility. Notice volatility here is constant. It's moving up slowly. That's what you want to see. So anytime I'm seeing that, that's a good buy opportunity. So it makes a high here, it comes down here, makes a high again, and now it'll congest again. But it continuously makes highs. Instead of going up parabolically and then moving down, we don't want that. We want a nice, smooth trend. So again, I like this movement that doesn't involve a lot of volatility, especially near all-time highs. So I do like the SMH. But what I've done for you is I went to my stock fetcher code, and I went to my cumulative strength index to the NASDAQ 100, and I organized it by the strongest stocks. I did this for you so you don't have to. And then I used it and went to chart mode, and I've handpicked the strongest semiconductor stocks individually that I like, and I'll go through them as well. And I've picked 5 for you. Why? Because it's New Year's. New Year's just started. I want to give you guys as much value as possible. Strongest semiconductor stock, Micron. World's leading provider of advanced semiconductor solutions. 1-year return, 42%. 5-year return, 568%. Let's look at the chart. Micron is a solid company, and it's the strongest semiconductor stock in the NASDAQ 100 right now. So I'm not telling you it's time to buy this stock, but I'm pointing out, I'll go from the strongest to the weakest, and there's like 30 of them, 25 of them. So I'm only gonna give you the top 5, the cream of the crop. Next one, LRCX. Enables its customers to shape the future of technology by providing market-leading equipment and services for semiconductor wafer processing. Look at the 5-year return, 603%. 1-year return, 67%. Let's look at the chart. And they actually make equipment for semiconductors, but it's the same sector. Notice, makes a new high, going through a nice little rounded pattern, coming back up. If it hits the 50-day moving average, we don't want it. If it takes out this high, we definitely want it. And again, notice volatility. It's not 5 points one day, 1 point another day, 20 points one day. You want constant volatility. Look at this range. Look at this volatility. It's very solid. It's very fluid. It's telling me that the trend will more likely remain intact. So LRCX is the second one, following Micron. Third one, Applied Material. Expertise in modifying materials at atomic levels on an industrial scale. Again, they make semiconductors. These are equipment processors for semiconductors. 5-year return, not 600%, but 440%. 1-year return, matching the return on the NASDAQ 100, 44%. Let's look at the chart, and we still have 2 left. This is Applied Material. Notice new high, rounding up, coming back up. I like this. Volatility is not increasing. Looks very, very similar to LRCX. A little different than Micron. Both of these are behind Micron, but I like the pattern on LRCX and AMAT a little better. It looks like it still has more upside to go before breaking down. Next one is Qualcomm. Most of you are familiar. Qualcomm makes chips for phones, cell phones, 5G, 3G, 4G. So they make semiconductors for wireless, smartphones, smart pads, iPhones, all the Samsungs and so forth and so forth. Amazing company. Believe it or not, but Qualcomm, when they first came to San Diego in the 90s, San Diego just flourished. Look at this, 1 year return, 73%. Why? People are switching to 5G, and this company is big on the 5G. So here you get yourself in the you dip your toe into semiconductors and 5G as well. And again, makes all-time highs. I believe all-time highs. Let's see. Oh yeah, all-time highs. Look at that trend. Backs away, not at the 50-day moving average, and I'm hoping it's going to come back, and I would like to buy it right at the 161 level when it's breaking out to a new high. But again, it's still above the 50-day moving average, and the volatility is fairly constant. I don't like Qualcomm technically as much as I like LRCX's AMAT. It's a little more choppier, so I like so far LRCX and AMAT right now. I'm talking about market timing. I'm not talking about long term. And last but not least, this company that overtook Intel. Don't tell my father that. Intel is his favorite company of all time. He likes to put computers together as a hobby, and he's an Intel guy. But AMD has always been behind Intel, trying to catch up, and it looks like they're finally here. Let's cross our fingers. They're making amazing chips. 1 year return, look at this, 90%. 3 year return, 667%. 5 year return, 4,446%. Man, they're doing something right. Most new computers are now using, you'll notice they're switching to AMD from Intel, and it's above the 50-day moving average, makes a swing high after congesting for a while, which is very positive. Let's see how strongly it's been going up. It's moving up, but not as fast as the other stocks, which means it's setting itself up for a nice little run up. So I like AMD. Out of all of these stocks, I actually like AMD and LRCX the most. But I wanted to give you a nice little preview of what to expect in 2021 as far as semiconductors, the fact that they are diverging to the upside from other technology companies. Overall technology and semiconductors are not really the same. They're kind of mixed in, but they're really kind of their own little commodity. If you want to look at semiconductors and gauge them, SMX is a good way to look at them as an ETF. If you want to look at them as an index, you could look at the PHLX. But again, SMH and PHLX have a correlation of, I'm guessing, 95%, 99%. So again, I went to StockFetcher, I went to my cumulative strength index, went to the NASDAQ 100, handpicked the strongest stocks, went from the strongest to the weakest, like LRCX, Micron, AMAT, Qualcomm. Notice they're all there. Weeded out the losers, and now, as I said, I like LRCX, I like AMAT, and I like AMD the most as far as the current chart pattern. I don't know which ones are going to rise the most. Historically, AMD is a huge, huge winner, and the odds are they're going to continue moving higher. So if I had to pick one and hold for a while, I would pick AMD. And I hope that helps. And I hope you all have the best 2021 ever.